Good day. Welcome to another session of Fog Accountancy Tutorials. Today we're going to continue our lesson on consignment accounts. And in this video, I'm going to pick a question that involves the valuation of closing stock. Like I do with every topic, I try to go step by step so that the understanding will be built better. So in this video, I'm going to take a question that involves the valuation of closing stock. And I'm going to show you how to do closing stock valuation. And so without wasting my time, I want you to be with me as I take you through this question. Okay. Jabril consigned 4 crates, each containing 30 identical cycles, valued at $1,500 to his agent, Nafisa, on 1st April 2021. Insurance and transport costs paid by Jabril amounted to $150 and $250 respectively. Nafisa paid insurance of $200, storage charges of $300, and delivery charges of $50. By the end of that quarter, Nafisa had sold 90 of the cycles for $7,200. She sent a check for the amount due after deducting her agreed sales commission of 10%. Required. Prepare the appropriate books for the quarter to June 2021 in Jabril's ledger. All right. Okay, so we are going to prepare these accounts in the books of Jabril. In this question, Jabril is the consignor, Nafisa is the consignee. And we are told to prepare appropriate accounts in the ledger of Jabril. So in this question, we are not going to even consider the accounts in the books of the consignee. Now, the only difference or the major difference with this question and that which we solved in part 1 is the fact that this one has a closing stock. If you look at the question carefully, we are told that Jabril consigned 4 crates, each containing 30 identical cycles. So if 4 crates containing 30 identical cycles, then the expectation is that 4 times 30 cycles is going to be 120 cycles. So that is the meaning. So the consignment was 120 cycles in all because each crate contained 30 cycles and 4 crates were taken. Now let's look at the sales. We are told also that Nafisa had sold 90 of the cycles for $7,200. So 90 were sold. So sales were 90 cycles. Now, if you consigned 120 cycles and 90 were sold by the end of the quarter, then it means that 30 is remaining. And the 30 cycles is the closing inventory. But then we need to put a value on it because the 30 cycles is just in units. So we are going to value the closing inventory. And that is when we are solving and we get to that side, I'm going to teach you very carefully. Now, before we attempt to solve this question, let me explain this. That with the consignment account, when I say consignment account, I mean consignment to agent account or consignment to Nafisa account in this case. You can simply call it consignment account or you call it consignment to Nafisa account. Now, we know that this is a profit and loss account in disguise. So this is a side for revenue, this is a side for expenses. We know from the previous question that we solved that only sales appeared. In this question, the closing stock will be added, and I'm going to explain to you why. And so let us solve this question. And as I solve, I'm going to explain to you how to treat the closing stock after the evaluation. Okay. All right, so we are told to prepare the account in the books of the consignor, that is Jabril. So we are not going to touch the books of the consignee, okay? We are just going to consider the books of the consignor. And there are 3 accounts we are going to open. The goods on consignment account, the consignment to agent account, which is the same as the consignment account, and then we prepare the agent account, that is Nafisa's account. So in this question, in the books of the consignor is Jabril. So we are preparing the books of Jabril. And we have to first of all prepare the goods on consignment account. So goods on consignment account. Show your currency sign in dollar. Now with the goods on consignment, we need to look for the cost of the goods consigned, and then we bring the figure to the credit side, just as we do. Okay, so let us look at that from the question. We are told that Jabril consigned 4 crates, each containing 30 identical cycles, valued at 1,500 to his agent Nafisa on 1st April 2021. So what it means is that the goods, there were 4 crates, and then each of them containing 30 cycles, but the unit price per crate is 1,500. Please, this 1,500 unit price is for the crates, not for the cycles. Just get it right. So when you multiply 4 by 30, you have a total of $6,000 for the cost of the goods consigned. And therefore, that is the figure you are bringing here. We know this from the previous video. That is why I'm moving a little faster. So 6,000, we call it consignment, or consignment to agent, or consignment to Nafisa. And then at the end of the period, we close it to purchases or the trading account. So this account is very easy to prepare. Now, let us focus on this account, which is the profit or loss account. We know that the revenue comes to the credits. In this case, is sales, and we list our expenses. We are going to do that which we know from the previous video. Then when we are done, then I'll add what you don't know. That is the closing stock, how to treat it, how to value it, and why. And so that is what we are going to do. So let us go back to the question, look for our sales, look for our expenses, list them, and then we'll be good to go. So we are told that by the end of the quarter, Nafisa had sold 90 of the cycles for $7,200. Now, please take note. She has sold 90 of the cycles. How many cycles were there? 4 crates by 30. That gives us 120 cycles. So if we are told Nafisa had sold 90 of the cycles for $7,200, what it means is that this $7,200 is not the unit selling price, but it's the total sales from the 90 cycles. But then it gives us an idea of the fact that 30 of the cycles remain in store, and that is the closing stock or the closing inventory, which I'm going to come to later. But for now, we are looking for the sales value, and the sales value has already been given to us from the question, and so we'll call it sales $7,200. But just have it in mind that 30 cycles will be used to value our closing stock. We are going to give this a value, and I'm going to show you how this is going to be valued. Okay, so now that we have our sales, we go into the question and pick our expenses. Of course, we break them down into the expenses of Jabril, the consignor, and then we look at the expenses of Nafisa, the consignee. Now, with the expenses of Jabril, we always begin with the direct expense of goods on consignment. So goods on consignment will come first at $6,000, and then we go back to the question and then look for other indirect expenses incurred. Okay. So let's continue reading. Insurance and transport costs paid by Jabril amounted to $150 and $250 respectively. So those are the two expenses of Jabril. Insurance is $150, and then transport cost is $250. Okay. So now that we know the expenses of Jabril, let us go back and look for the expenses of Nafisa. So we continue reading. Nafisa paid insurance of $200, storage charges of $300, and delivery charges of $50. And so Nafisa, she paid for insurance $200, then storage charges $300, and then finally delivery cost of $50. So that is what we have discovered so far. Let us go back to the question and find more. We are told that by the end of the quarter, Nafisa had sold 90 of the cycles for $7,200. So we've treated that already. She sent a check for the amount due after deducting her agreed sales commission of 10%. So the last expense is the commission, the sales commission of 10%, and it's 10% on the sales. In this very scenario, the sale figure is 7,200. So 10% will become 720. So ladies and gentlemen, this is how to go by the consignment account from what we know already. Okay, so now that we know this, now we don't know how to value the closing stock and how to treat it. So I'm going to take my time. Follow me as I explain the concept of closing inventory and how to treat them in the consignment to agent account. Okay. Now, with the closing stock valuation, this is what we do. We have already identified that there were 120 cycles in total, and then 90 cycles were sold. So we have 30 cycles left. This is the closing stock. But what is the value that we'll place on this closing stock? This is what we are going to do. Now, we are going to value this closing stock as, 30 cycles over the whole 120 cycles times the cost of the goods. But we are not only going to factor the cost of goods consigned. We could have used this 6,000 because we brought the cost as 6,000 for the total consignment. So if 90 is sold and 30 remains, we just need to use this as a fraction to find the total value of how much is remaining. That should have been the simple or the simplest logic. But that is not what we do in all. We need to add up the expenses that are incurred to the cost of the goods because they are also part. Now, with the expenses that we add up in the valuation of closing stock, we only include the expenses of the consignor will be included because the 6,000 is already a direct expense. But the insurance and the transport were also expenses that accompanied the goods consigned, and therefore we add that. But when we come to the expenses of Nafisa, who is the consignee, we need to only include the expenses that are related to the incoming consignment and the goods in the warehouse, not the ones that relate to the sales and marketing. So in other words, expenses of the consignee that are related to marketing and sales are excluded from the closing stock valuation. If you look at the expenses of Nafisa, we have insurance, we have storage. Insurance relates to the incoming consignment, like they have insured the goods in the warehouse. So that one is included in the valuation. Storage, the cost of the storage is also part. But delivery is a marketing expenditure. It's like you are selling it out and you are delivering. The commission also is about sales. So these two will be excluded. So the general principle is that both expenses of the consignor and consignee are added in the valuation of closing stock. But the ones that are of marketing nature by the consignee will be excluded. So for that of the consignor, you include. But that of the consignee, you are selective. The ones that are related to the goods that are coming into the warehouse will be included. But those that are of marketing and sales nature will be excluded. And in this case, delivery and commission are of marketing and sales nature. So we exclude them from the valuation of the closing stock. So in other words, we are going to pick 1, 2, 3. And when we come to the Nafisa or expenses, we pick only the insurance and the storage. So look at what I'm going to do. Let us add up all those expenses and see. So we have 6,000 plus 150 plus 250 plus 200 plus 300. We add up all these, and then that is going to give us 6,900. Now, so instead of using just 6,000 to value the closing stock, we are going to use 6,900. In other words, we are using the 6,000, which is the cost of goods on consignment, plus all the expenses that relates to the consigned goods. And then we only excluded the expenses that are of marketing and sales nature. And so we are going to multiply 30 over 120 by $6,900. That is the meaning. That is how closing stock will be valued. The remaining stock over the total stock times the total direct and indirect expenses incurred that are related to the goods consigned. The only exclusion is the expenses that are of a marketing nature. Okay. And therefore, 30 over 120 times 6,900 is going to give us $1,725. So this becomes the value of our closing inventory. Okay, so now that we have the value of closing stock to be 1,725, we are going to record it here on the credit side of the consignment account where we have the sales 1,725. And the question I know you'll be asking is why? And the reason is simple. You see, in the accrual concept, we match revenue against expense. Okay, but then the expenses that we have here relates to the whole consignment. At least everything here relates to the whole consignment. But the sales of 7,200 relates to only the 90 out of the 120. So if we compare without the value of the closing stock and we get a profit, the profit we are going to get will not be the correct profit because 7,002 represents 90. The expenses here represents everything. Look at the 6,000 for the whole consignment. Therefore, whatever is left must be added so that at least it will be a true reflection of the profit that we are getting. So the general principle is that once you do closing stock valuation, you add it to the credit side where you have the sales, and then you can now find your difference as net profit or loss. And so when we add up, you can see that the credit side is the bigger side, 8,925. So the difference will be called net profit. And that is 1,255. So this is how to go by the net profit. So you add the closing stock will be credited to the consignment account, and then you arrive at your net profit. So now that we have done this, let us quickly look at the last aspect, which is the agent or the consignee account. So we are going to prepare Nafisa's account. Nafisa is the consignee. Now, you remember what I told you from the previous video, that the Nafisa account is basically the sales and the expenses of Nafisa. Now, please take note that closing stock, even though it's here, will not appear in the consignee account. And so what we do is that sales will be on the debit side. Sales. This is in the books of Jibril, the consignor. The value of sales is 7,200. And then we list the expenses of Nafisa on the credit side. So insurance, 200, storage, 300, delivery expenses, 50, and then the commission. Commission is 720. So this is how to go by Nafisa's account. So when you are done, you just balance it off, and the difference will be a bank settlement. So the total is 7,200, 7,200. We know this from the previous video, and that is why I'm rushing it. And so the bank settlement will be 5,930. So this is the money that is expected to be received from Nafisa, the consignee. Okay. And so this will bring us to the end of our part 2 of the lesson on consignment account. Now in the part 3, which is likely to be the final part, I'm going to talk about what I have not spoken about, including stock losses, normal and abnormal loss, and how to look at them, value them, and treat them. And then any other aspects that I have not yet spoken about concerning the accounting for consignment, I'll talk about them in the part 3 of this video. Remember to subscribe to this channel if it's your first time. Share this video and let others also have a benefit. And until we meet again for the part 3, it's bye for now. Thank you.